name is Bryce Kirkpatrick of Mortgage Design Group. Today I'm joined by Rachel Ambler. How you doing, Rachel?
Good. How are you?
Doing great.
Awesome.
How long you been in the mortgage industry these days? It seems like it's been forever.
It has been.
Yeah. Maybe we shouldn't ask that question.
No, it's coming up on 14 years.
Wow. I've been there every step of the way. It's been
have,
fantastic.
Yep.
Awesome. Well, today, thank you again for joining us. We are going to discuss the ultimate question, fixed rate versus variable rate. What are you seeing today when you're discussing with your clients, fixed versus variable?
Yeah, so everybody asks that question, and I like to give them information on both options, obviously. You know, we do see quite a few people leaning towards fixed rates, but right now, both rates are at an all-time low, so it can honestly go either way.
Yeah, absolutely. I mean, rates have been incredibly low, so I don't know if there's even a right answer to fixed versus variable.
Exactly.
It's probably due to your budget for the most part.
Exactly, yeah.
Okay, so let's go over kind of the benefits maybe to, what would be the benefits to a fixed rate?
Yeah, so a lot of the time people like to go with fixed rate if they're looking for a little more security and consistency with their mortgage payment. It really gives them peace of mind in their budget, knowing what their payment is going to be for the entire length of their mortgage term that they're committed to.
Perfect. So with a fixed rate product, let's say we take a 5-year fixed rate. Okay, so for 5 years, in that 5-year term, my payment is going to stay exactly the same.
Exactly. Yes.
So this is great for somebody that's, you know, looking to have a secure budget, or a budget with, you know, a fixed budget, I guess.
Yes, a fixed budget, or you know, even with the inconsistency of the economy right now with the pandemic.
Great point.
People, you know, losing their jobs for a short period of time, or not sure if they'll be able to keep their job. It's really nice to know what your payments will be, so you're prepared.
Fantastic, fantastic. So if you're adverse to quick changes or budgets coming out, probably you're fixed. Fixed is a security, peace of mind.
Exactly.
Okay, what about a variable rate? Now that is based on Bank of Canada Prime, is that correct?
Yeah, so variable rate, you know, is like a floating rate, so it follows the Bank of Canada's prime rate, which right now the Bank of Canada's prime rate is 2.45%. So whatever that rate does is what your variable rate will do. So the variable rates are priced based off of that. So for example, we can offer you around like 1% lower than the prime rate, which would end up being 1.45%. So it follows whatever the prime rate does. It's always, you know, 1% below.
Okay, so basically with as long as Bank of Canada rate, let's use that example, prime minus 1 for your variable. So if Bank of Canada rate, like you said today, is 2.45, your rate would be 1.45 and your payments based off the 1.45.
Correct, yes.
Fantastic.
Yeah.
Now, so obviously that's lower than the roughly 2% fixed rates we're looking at for 5-year terms.
Yeah, historically, you know, variable rates are always lower than fixed rates.
Seems to be that way over
the
time.
Yeah.
What would be a great strategy then to take advantage of this deep discount variable rate?
Yeah, so what I always recommend to my clients, if they are comfortable going with a variable rate, is if they can budget for to set their payment like they would if their rate was the fixed rate, for example 2% rather than the 1.45%, you're actually preparing yourself in case that variable rate has a slight increase over your term, and at the same time you're able to pay down your mortgage principal.
Oh wow, so I love that. That's a great strategy. So if I have a 1.45 variable rate but set my payments to match the fixed rate at 2%, I've got just over 0.5% where that money, the extra payment, does that go straight to principal?
Yes, it goes straight to your mortgage principal.
Oh wow, so that hammers your mortgage down fast.
It really does. You'd be surprised how quickly it can decrease your mortgage balance.
Or at least, what it does. Even a small $50 a month or something.
Exactly, yeah.
Wow, that's great. Now, how many times a year does the Bank of Canada view the fixed or the variable, the overnight rate, the prime rate?
Right, so the prime rate is reviewed by the Bank of Canada 8 times a year.
Okay.
So, you know, they go in and assess whatever they need to, and they'll either increase, decrease, or keep it the same. And so your rate then kind of depends on that.
Yeah, economy,
Mhm.
whatever's going on.
Yeah,
Typically, right now it hasn't moved. It's been pretty flat for a while,
Yeah.
so
Mhm.
which is great. Now, is there any difference in, because I know this is a hot topic for clients as well, payout penalties? So if I have a fixed rate, are my payout penalties different than if I have a variable rate?
Yes. So if you have a variable rate, you will always know what your payout penalty is. It's always 3 months interest, which is super easy to calculate. You can contact your mortgage broker and figure out what that is. So it's quite low. With the fixed rates, it's always the higher of two different options, whichever is higher.
Okay.
So either the 3 months interest or what we call interest rate differential. And interest rate differential is just a calculation based off of the difference in your rate and your lender's current rate and your balance and how much time you have left. So it's pretty much calculates the interest that your bank is missing out on by you know cutting your term loose early. So so fixed rates often your payout penalty is higher.
A higher thing. Okay. Now, if a client of yours comes in and they're, undecided, do you have any tools that you use that can show, here's what it would be as a fixed rate, here's what it would be as a variable rate, and what the savings are?
Yeah, absolutely. We have this super fancy calculator which we can put, all that information in, your mortgage amount and the different rates, and calculate kind of what your savings would be based on going with one or the other, or what your balances would end up being, and we can kind of show you the difference if you do go with one or the other.
Which allows everybody to make an educated decision
Absolutely.
on how they want to move forward. It's a big deal.
It really is, yeah.
Now, how can anybody, or how can the public here get in touch with you, Rachel, so you can answer any questions they have?
Yeah, I mean, you can contact us here at our office, or you can call or text me directly on my cell. It's 403-393-9315.
Perfect. If you want to reach out to Rachel or any other amazing team member at Mortgage Design Group, please find us at mortgagedesigngroup.ca. Have a great day.